Hi, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Thursday the 6th of February. Please make sure that you've read the disclaimer at the bottom of the morning report page on our website, as this video is just for informational purposes only. The handover that we've got from Asia is fairly muted actually. Markets have been pretty much drifting after a pretty volatile day that we saw yesterday. We had two bits of data that created a bit of a stir in the markets. We had the ADP number in the afternoon from the States. Came out at 175,000, arguably gives a bit of a steer for non-farm payrolls on Friday, but certainly last month that wasn't the case. But still, investors have pounced upon that and used that as an opportunity to trade. And also later in the afternoon we had the ISM non-manufacturing PMI data for the States, which is the services PMI for the US. That also caused a bit of a stir in the afternoon, but since then we've had a bit of a drift sideways, and I think investors are certainly going to be looking towards this the most important bit of data for today, which is the ECB announcement on its monetary policy. That comes at 12:45 GMT. The prospect of a possible rate cut is clear, following on from that disappointing inflation number that we saw from the Eurozone last week, falling to 0.7%. It is possible that there's a rate cut. It's probably up in the air as to whether we're going to get one, as apparently the liquidity in the Eurozone is still fairly reasonable, and the inflation data throughout the different countries in the Eurozone is fairly differentiated, and you could argue that the core Eurozone countries are still fairly well okay in their inflation data, so maybe the peripheral inflation or the peripheral move towards deflation is actually beneficial for their move towards a more competitive market. So arguably that is a case against cutting interest rates, but it is possible that there would be an interest rate cut today, possibly from 0.25% or 25 basis points back down to 0.1%, is the most likely move that the ECB would make in that instance. But the markets, as I said, are going to be looking towards that with a bit of caution, and obviously in front of this big non-farm payrolls number that we've got tomorrow. But the chart of the day that I'm looking at is actually the Euro-Japanese yen. We've seen, sort of talked about it last week. We had this downtrend channel that had been in place. We actually broke below that trend channel, and you failed to get back above it. And I still think, as with dollar yen, I think which is coming back towards the 100 level, I think euro yen could also be coming back towards this uptrend support that we have been seeing in recent times, and I think that suggests that this bounce back towards the trend line, which is falling over again, I think is another chance to sell. You've got these downward moving momentum indicators, the RSI and the MACD, both in bearish configuration. And if we look at the intraday chart, you'll see a very clear level at 137.50, which seems to now be a pivot level. You had that being used as a basis of support within that shift downwards. It got tested there on yesterday, tested again in the early hours of today, and has fallen over once more. Yesterday we saw that test that came with a MACD sell signal. The euro yen then fell away. Rally in the euro yen, but then once more we've seen a crossover sell signal on the MACD, which suggests perhaps we're going to see a retest of that 136.51 level, I think, at some stage today, perhaps, as I think this 137.50 level is now pivotal. And I think ultimately euro yen will be drifting back towards certainly a retest of that low at 136.20 in due course. So that's euro yen. Please, if you do get an opportunity, I recommend checking out our euro dollar, cable, dollar yen and gold charts on our more import page. And I wish you good luck with your trading. Good luck with your trading of euro yen, and I will speak to you later. Thank you very much.